G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. I'm your host, Aaron Christie David, and I run a mortgage broking business called Atelier Wealth, where we help property investors start out and scale up their property portfolio. A common asset class that we see that kind of people think is for the more advanced investor is commercial property. However, I'm kind of here to flip that on its head and say, look, there are a lot of our newer or younger investors that are coming in with a keen eye for getting into commercial property, and the upside kind of suits them based on their goals as well. And I think they're trying to build wealth, not only through residential, but also through commercial as well. And so what I've done is I've scoured the internet to try and find some really, really good partners. We've had people that have spoken about commercial before, but I think having a different perspective is always very beneficial for our listeners as well. So I do want to kick off by saying this episode is general in nature and not intended to give advice. If you do need advice, please seek out a qualified professional. I want to welcome Mish Daniel onto the podcast today from Revolve Commercial. G'day, Mish. How you doing?
Hey, Aaron. Lovely to be here.
Thanks for joining us.
Reaching out.
Nah, not at all. Thank you very much. And doing some research and seeing what you're about. But I think most importantly, seeing your results and your longevity. I think that's probably a very, very good reflection that you play with a very straight bat, that you're getting great results for your clients. And I really want to kind of get inside your head to go, how have your clients gone on to achieve long-term success through commercial property, which we'll come to in a second. But before we do kick off, I know that you kind of wear a few hats from a business perspective, from a family perspective, from a life journey as well. So as in true tradition, we start with the 3 Ps, which is a bit about yourself personally, professionally, and your own property journey as well. If you can share with us, please, Mish.
Okay, so personally, South African born, moved here 10 years ago.
The wonderful accent, it gives you away. It doesn't matter how long you've been in Australia, right? It's iconic.
Yeah, no matter how hard we try and disguise it, it's still there, man. Yeah. And there's enough of us here.
Great community. Community. Yep.
Yeah, so I ran manufacturing businesses in South Africa. I had three factories, and we manufactured under license to Reebok, Nike, Puma, lots of sports brands, big corporate brands as well.
Nice. And
that was clothing manufacturing, screen printing, and embroidery, the vertical operation. And I realized at a young age that nobody was going to look after me, so I needed to look after myself. So I started investing in real estate. Nice. And I basically built my portfolio on the manufacturing side as well as the real estate. Life happened in South Africa, as most South Africans have been through, and the writing was on the wall. I needed to leave. I had the opportunity to move to Australia, so here I am. I've got 2 beautiful little blonde girls, happily married. They were very young when I made this decision, and I landed up in a wheelchair. I was attacked. My factory was burnt down. I was held up at gunpoint, and I just decided I don't want my kids to go through what I'm going through. So I survived it. And I just decided I can't do this and I can't bring them up like this. I had the opportunity to move here, and I thought, you know what, we're going to do this. So the long and the short is, when I moved to Australia, I moved with 8% of my wealth, because the exchange rate was it was diabolical. It was like 1 to 12. So by the time we arrived here, we arrived with 8% of our wealth. And it took 6 years to bring that money through to this country. So my back was up against the wall. I thought, well, I can't do manufacturing here. What else do I know? Real estate. And I jumped straight in. Long story short, got into commercial. It's an area that I know very well. Had been doing it for 30 odd years in South Africa. Applied the same principles, learnt the rules and regulations, surrounded myself by very good people, and built up a portfolio. And within about a year to year and a half, I was earning more than most people were out of their day jobs.
Incredible.
And that was purely out of commercial property. You know, people were saying to me like, wow, how have you done this? I said, well, simple, really. Apply strategies, go in commercial property. And I had replaced my income, and the rest is history. People were asking me how to do it. And I thought, well, I can show you, but I'm going to charge you.
Yeah, people get value from what they pay from, right? So you can tell people, but it's not qualified advice in that sense, really. It's just a conversation. Whereas someone pays you and engages you, they're going to take what you say on board, right? So
yes, absolutely. And it's years of experience. I mean, it has been trials and tribulation. It's been a very interesting journey since I've been here and been doing it. And I'm absolutely passionate about what I do. I am absolutely passionate. I had reached a stage where I thought, what am I going to do? What am I going to do? It's like your whole life is starting all over again. Follow your passion. Just do what you love doing, and the money comes to you naturally anyway. So, yeah, it's been an interesting journey and a lovely journey.
Fantastic. Thank you very much. And launching Revolve Commercial, I guess that's off the back of what you're saying, some conversations, people going, how did you do it? So I guess that's the we'll start with your business and its inception and its growth. And then that's the $1 million question is, how did you do it? Because you said, oh, it's relatively simple. People probably hate that where they go, oh, it's simple for you. Doesn't seem simple for me.
When I first launched it, I launched it probably about 7 or 8 years ago. And we've gone through a couple of brand changes. So I was trading as Mish Daniel Commercial. And then we got to a stage and I met up with somebody who said, you know what, Mish, you really need to clean up your act and make it a professional brand, which we did about 2.5 years ago. So we changed it to Revolve Commercial. And I decided I'm going to make a good go of it and bring some really good people in. So strong collaboration partners. And, yes, this is not an easy game to be in. Commercial real estate it's not an easy game. And I guess that's why a lot of people don't go into commercial real estate. I always say buying residential properties, easy peasy. We live in a house. Everybody buys a house.
Yeah.
You know what to do there. You've got 2 areas of due diligence. In commercial, you've got so many different facets of purchasing a commercial property, so many areas of due diligence. You really need to have your P's and Q's and all your T's crossed and your I's dotted to know whether it's a good acquisition or not. And there's so many things that happen on the journey. I could bore you for hours of case studies that we've done where we've gone into properties that are the most unbelievable properties. And without having the right knowledge, and I can see, clients come to me afterwards and they say, hey, we bought this incredible property. It was 8% medical property. And straight away, I look at it and I say, okay, let's just go through it. So what do you want from me? And they say, well, I just want you to check it out and take on the management maybe. And I'll have a look at the property and I'll say, but you've paid, your rental is inflated. So it works in balances.
Yep.
If you're paying high rental, you're going to pay a high price. So they overpaid for the property because the rental was inflated, the leases weren't secured, and whammo, they were stuck with $1 million property that in actual fact was probably worth about 700,000 or 800,000. So it's little nuances,
So your due diligence, you've kind of just done that probably in your own mind. You looked at it going, hang on, this doesn't look right. And that's a trained eye. It's a bit like when we do it buyers agents and they're like, that property's not going to stack up. You're looking at that deal, that's not going to stack up. Take us through that due diligence checklist that you've just done in your head to say yay or nay. What are you looking at? So you mentioned like the rental, are the leases secured?
We look at hundreds of properties and you're 100% right. It really is a matter of training your eye. So the first thing you do is have a look at the asset itself. So if you go onto, let's say, Real Commercial, for instance, and you find something you like, you're looking at the pictures. Do you think the asset looks like something that you'd resonate with? You like it? Okay, you need to kind of like the property. Next thing I look at is I have a look at the yield. So I'm going to go and I'm going to look for the net rental immediately, and I'm going to have a look at what is the asking price, and I'll know more or less what the cap rate is, so the capitalization rate in that area. Let's say if it's Bundaberg, for instance, I know that Bundaberg should be around about 7% depending on the type of asset. Now, if we're looking at an industrial asset, we're looking at around about that 7%. If it's retail, maybe about 7.5. If it's office, I'm going to push that quite a lot higher. So I know what I'm looking for straight away.
Yeah. I'm
going to run those numbers immediately, and also know that in that area, depending on the type of asset, that maybe you should be paying maximum 150 per square meter, depending on the type of asset. I'm going to work that out, and immediately I can tell you it's an inflated rental or it's market rental.
Right.
And based on that, I'll tell you whether it's the right price. Okay. Couple of other factors to look into is it a lease back? Because the minute you see a lease back, you got to think, well, if somebody's leasing back, what are they doing? They're wanting to draw the equity out of their property to maybe fund a lifestyle, a business, whatever it is. So they're going to want to get as much equity out of that property as possible, which means that the chances are they're going to inflate their rental. High rental, high price. So you're going to look at all of that, do a quick market research, see if it's market related, and whammo, keep moving. If not, go back to the agent, negotiate with the agent, say, look, mate, they're charging themselves $50 over rate. Are they willing to come down? And then negotiate from there. So I guess it's the trained eye. The little nuances.
Beautiful. And I guess, some people like in this example, and we get this sometimes on the resi side, whereas I've bought the property, now I'm looking for a bit of confirmation bias that I've bought the right property, for example, and now you're going to kind of retrospect or retrofit a strategy around it. So an engagement and a great engagement for you, what does that look like where you can kind of take a client, maybe they've got, give you a scenario, they've got maybe a couple of residential properties, so now they're looking to maybe diversify their portfolio, which means they've got good equity, generally got good borrowing capacity because they've been able to scale up for a few properties as well. And now they're talking about, hey, look, how do I buy my first commercial property? What journey are you taking them on, and what kind of questions are you asking to filter out what type of asset class they should be investing in, Mish?
Fabulous question. Absolutely amazing question. What I do firstly is I want to know what type of experience they've got and what work they work in. So what are they familiar with? Okay. If they have, let's say they're new to investing and they've got 2 or 3 residential properties, we want to know where they are and whether they are positive. Okay. If they're positive, I'll say happy days. Then you're good to go straight away. Let's say for argument's sake, it's a doctor. We have a lot of doctors that come through they're looking to go into a commercial property. I would have a sit-down meeting with them where we're looking at and I'd be asking them, what are they comfortable with? Now, everybody says industrial because industrial is the flavor of the year right now.
Correct.
However, a lot of people don't understand industrial, and if they understand the numbers, and if they're coming from a numbers background, engineering or something like that, I'll say, great, happy days all day. A doctor type person is not 100% au fait with industrial, so I know straight away I'm going to be doing quite a lot of explaining and teaching. They're more comfortable in something that they're familiar with, so they might want to go into something that is allied medical. They would relate to that. So we would set that as their first acquisition, or we have it scaled in A, B, and C. So their A property would be maybe an allied medical. Their B property might be something that's light industrial, and then the C property would be something other than that, retail. 9 times out of 10, you find if you're putting the wrong person into the wrong property, not that they're going into the wrong property, it's a matter of understanding how it actually works, you know.
Well said.
Yeah. So we take them through the journey. If they've got negative property in their residential portfolio, first question is I ask them, what do they intend doing with it? You know, are they going to keep those properties? Are they waiting until there's market lift? You know, where do they want to go? Because I know straight away that is going to affect their lending.
Yeah, nice one.
So when clients come on board with us, the 2 fundamentals that I do is I would introduce them to specialists. One would be in funding, and the other one would be in asset protection. Make sure that their structures are 100%.
That's the next question I pretty much had for you, which is quite often it gets to this point, then their eyes glaze over and you go, well, how are we purchasing this property? Like, are we going through a self-managed super fund? Are we going to do it through a commercial, through a trust? And I don't know, I thought I was just going to buy a commercial property and unit trust. And so that, I won't say it's a right thing to do it. So it's getting your house in order and the right way to do it. But often it adds just that layer of complexity, which is then adding more people to your team. So you've suddenly got someone like yourself, a buyer's agent. You've then got quite often a finance person, broker, or a commercial banker, for example. And then you've got financial planner and or an accountant as well. So the team then starts to grow, and you may throw in the property manager at the tail end, which is then managing your asset.
So as we go through the journey, we introduce them to land surveyors, to quantity surveyors, so these are all pieces of the puzzle that, and as you say, the team members, you've mentioned all the legal and financials, but and again, in commercial, the fundamentals are to have a look at the building itself, as well as the leases. So the legals, the financials, everything else that goes with it. So it's a whole journey all the way right through to the end. And then of course, the management. What people don't know is that in commercial, the management is actually one of the most important of acquisition.
Yeah.
That is where you're going to make or lose, whether you're adding value or whether you're losing value.
Spot on. The right tenant will make or break. Like, last thing you want is turnover. Now, some businesses are naturally going to outgrow. I think that's a great success story where you got businesses that outgrow and they need bigger premises, for example. That's a sign that business is successful. Whereas others that kind of flounder a little bit, and then you got that turnover, and that's real estate that then has a reputation for a bit of turnover, not because the property's bad, but maybe the wrong business went in there and now it gets a little bit of a black mark next to its name from a property perspective, right?
Yeah, absolutely. Or you might have a business in there who's, maybe they've got a successor and they bring somebody else in, a manager, and the manager's not running the business very well. And you start recognizing that things are really not going the way that they should be. Business is dropping. What happens the minute business is dropping? The first thing they think of is, maybe we can get a rent reduction or a smaller space or something like that. It's really very important to maintain those relationships with tenants.
Yeah.
To find out what's going on, keep them bubbling, keep them going, finding out where they want to go and what they want to do.
Yeah, perfect. I often say, and people that listen hear me say this regularly, is success leaves clues. So someone like yourself, where you've probably, and I don't need to know the details, but you've been around for some time, which means that equals some type of success that you've achieved in your own portfolio.
No.
What would you attribute your success factors to be, do you think, Mish?
One word: tenacity.
I love it. I love it.
I'm the bulldog that doesn't let go.
So take me through, like, what's a real life example of, I guess, your tenacity that comes out and having built your portfolio?
Look, in our game, I always say this is a real mugs game, because we're out there and we go out to battle for our clients. And if you think about it at the moment, the statistics are that you've got 58% more buyers in the market than what you have properties. Okay, so you've got 58% more buyers that are effectively looking at the same property that you're looking at. And if you're not quick, you're not fast, you're not on the draw, you might lose that property. And what happens is a lot of people that are maybe not unexperienced purchasers might go into the property. They don't know how to do the due diligence properly, and that deal might fall over. So what I always do is, if I really like a deal, we'll go in, we'll make a reasonable offer. If we don't get the property, I'll go back to it. And I'll go back to it, and I'll go back to it until I know that the contract until it's been settled. And often what's happened is we've had a lot of wins by just going back to that same property, pulling it back up, speaking to the agent, and being tenacious with the deal, being tenacious with the agent.
Love it.
And the agents really like that as well, because they know that you're serious about the deal, you're serious about your offer.
Yep.
And they know that if that deal does fall over, well, who they're going to think of?
Spot on.
They're going to come straight back to you.
Spot on. And this has come up consistently, Mish, when I speak to a lot of, say, buyers agents, real estate agents. The buyer that shows that level of tenacity, the one that stands out in the crowd, that one that won't take no for an answer, the one that keeps pushing and putting themselves at the top of the queue, they are the successful buyer or bidder, for example. And I think quite often people just get that no, that initial rejection. It hurts, it stings, dents their confidence, and they go, well, I missed out. And it's like, well, hang on, you haven't missed out because no one's signed the dotted line yet. Keep pushing till you get that response. And that's probably what separates the good from the great in any industry and in life in general, I'm assuming as well.
Absolutely. I mean, the one thing somebody was asking me about, what's one of the biggest pain points? And I always say, well, I've learned to love rejection, because we get rejected every day.
That's exactly
we don't take it personally.
Yeah. Yeah. Well said. Well said. Yeah. What are some of the traps that you see that maybe people that started out strong, faltered a little bit in terms of, like, I guess we'll call it tenacity, and could have, or they had the means, they had the income, they had the opportunity, they've got the equity, for example, but they just didn't hit their straps, they didn't hit their full potential, for example. What do you feel brought them unstuck? Was it the wrong tenant that then just left them a little bit jaded, or was it some cost that blew out and now they lost a bit of faith in the process, for example? What happens to some people there?
I think there are two answers for that question. The one is that it's ill-informed, so lack of education, where they're going into a deal and it's all sweet and fine and fabulous for a year or two, and then things start hitting a wobble, as they do, and the tenant wants to move out. And as a result of lack of education, not knowing how to deal with that, not having the right agents on their side, they now want to sell the property. So that's a big no-no. Absolutely not. And again, that's where tenacity comes in. You say, well, what do you do with lemons? Let's turn it into something.
Spot on.
Make it, just don't take it personally. Have a look at the lease, put it back on the market, get it rented out. You might take a little bit of a hit on your rental. You might have to come down on your rental, which is quite normal, because the commercial market runs in cycles. That incremental increase that grows up at the top of the cycle, you're going to come down. Now, if you do the rent review or new tenant, you start the wheels all over again, but don't let the property go.
Well said. And I guess financing is another one where people, again, goalposts may move from a finance perspective as well, but I'd say seeing what a lot of the banks are doing, I'd say they've become pro-commercial. Banks are so much more open to commercial finance these days. Like the amount of commercial products that we see come out, 30-year loan terms, for example, not the reviews that were previously done in the past. So residential lending may tighten up. And this is where I probably see that prevalence now of more commercial interest is going, hang on, the banks are quite pro-commercial for the right client and the right property. And some of the loan products are reflective of that kind of innovation in this space as well.
Aaron, I'm having a giggle to myself because I'm thinking to myself, what's taking them so long?
Right? Like you probably got the first mover advantage, like having bought commercial in the past, whereas now it's like they've opened the floodgates a little bit more. So you've probably seen that. But I think people associated buying commercials. I'm self-employed, therefore I'll buy my premises, and that's what commercial was. Whereas now it's become a true asset class in its own, and the banks are enabling investors to get in as well.
Yeah, they are. And I mean, you can speak about this more than I can with regards to the fabulous product that a couple of the lenders have brought out. As you say, 30 years on commercial is just unheard of.
Yeah.
And what that means is that your interest rate's the same, but your repayments are lower. I'll leave that for you to explain a little bit more to the audience.
I normally would. However, Bernadette does all our commercial lending. And again, so I'm going to steal Bertie's thunder, as I probably do a fair bit. But having seen Bernadette do self-managed super funds, self-employed lending, but mainly commercial as well, there's such a specialist skill set that comes with being commercially accredited, for one. Like you've got to get accredited by lenders to do commercial, but also the knowledge, like home lending, residential lending, if it's policy, it's like tick, 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 bank will approve it. Commercial lending, it's like there is no black and white policy. It's like, here's the property, here's what the clients are looking to do. Maybe we could try to fit it this way. Maybe we've got another product here. And I can say that because we've recently just acquired a commercial property. And initially it started with a no, and then it became a maybe. Then we presented, it's like, it's a firm yes. And I was like, imagine we took that no at the very beginning and we just kind of packed up shop and went, didn't engage. And again, it speaks about tenacity, but it's like, that's what a tenacious broker in the commercial side will do. It's like, no, mate, they say no, we'll keep going, we'll keep going, we'll keep going to find that if that's what you want.
I'm so pleased that you're speaking about that, because at the moment, that's exactly what's happening in the market. And the clients are kind of stepping back and saying, oh, well, they've said no. And I know that there's so many different ways of lending.
Yep.
So we just go back and we say, well, find another lender, or find another strategy, or find a second tier lender. We use dynamic strategy for helping our clients to get into a property. I'll give you an example. We've got a client at the moment. They are medical professionals and they're going to be specializing. So they're doing their final years of specializing. So they're not earning specialist rates just yet. Any lender that has a look at them should be sitting up and saying, oh, we want them as a client, because come next year, they're going to be earning specialist rates. So they're a little bit ahead of their time. We've got them into the most incredible asset, and we've had quite a rocky road at getting their finance. But it's this tenacity of never giving up, of going back, working with the right people and saying, mate, just squeeze it again, run it again, take it somewhere else. Long story short, we've managed to get them 100% loan.
Beautiful.
And with one of the first tier lenders who can see that there's longevity in this. So they are super, super excited. It's their first commercial property, and it's a little bit of a triumph.
Correct. And just on that point, you skipped over it, the 100% finance. I'm like, that's what's available for, like, think about resi. It's like, you need 10%, 20% sometimes. Commercials, sometimes you do need more. But other times, depending on what industry you're in, or depending on what occupation or what type of property you're buying, there's 100% finance given by that. And you're like, mate, here is an opportunity of a lifetime to get in. And just like residential many, many years ago was, you could get in at 100% finance. I remember when I started broking, you could buy an investment property 105% financed, and wow, it was nuts. And now you couldn't dream of that, for example, in the stress testing they're putting on that. Whereas commercial, they're opening the door. It's like, hey, mate, grab this while you can with both hands, because some of these policies may not be around. There's more that kind of market gets saturated. The more the banks get exposure, then they'll start to know where their sweet spot is and maybe tighten up some policies, which when you follow the pattern of the banks, that's what typically happens as well.
Absolutely. And I mean, for those people out there that are sitting on the fence and wondering, I always say, if you don't stick your feet in the water, how are you ever going to learn to swim? Reach out, find out. We have a lot of clients that come through to us that they check it out. And if it's a no, it's a no. And I'll tell you straight away. We can have a look at their situation there. We invite our clients to go down a little bit of a path so we can check them out straight away. And we'll tell you whether you qualify for a commercial property or not,
Beautiful.
So fairly easily. And the bottom line is, the first question is, how much equity do you have?
Yeah.
Okay. So we always take a worst case scenario. So let's say 60% LVR. So if you've got 400,000, you can jump into $1 million property, and it only gets better from there, because again, if you're in the medical profession and you qualify for an 80% loan or a 90% loan, happy days. You've just landed yourself in a budget of 1.2, 1.3 million.
Well said. Looking at your journey and especially working with clients, what do you think's kind of a standout property and acquisition or one of your most successful purchases to date, do you think, Mish?
Probably through COVID.
Yeah.
We were the busiest that we've ever been through COVID. And towards the end of 2019, we were negotiating quite a lot of deals. One of them in particular was a shopping center that was on the market for around about 3 million. It was just sub 3 million. I think it was about 2.8 million. And the vendor was really just holding on to that price and holding on to that price. And I could see that we did a lot of work on the property. I could see that the tenants were frazzled. They weren't getting the attention that they wanted. Pretty good tenants as well. It was about 7 tenants, if I remember correctly. And I saw an opportunity there. So I just let it ride. And as COVID came in, as the lockdowns came in, the vendor was getting more and more anxious because she didn't know what to do. She didn't know how to treat the tenants. She didn't know how to have that communication. And the tenants were, not paying rentals. And it was a little bit of a schmozzle. And we went back in and we offered her, I think it was about 2.5, and she turned it down. Flat turned it down. So this was over a period of a couple of months. We let it run for a while, and eventually we went back to her with a ridiculous offer at about 1.95, which obviously she turned down.
Yeah.
And we finally settled on that property at 2,075,000.
Wow.
By that stage, half of the tenants weren't paying all their rental. They were paying part of the rental. There was no communication. There was nothing between the agent and the tenants. They didn't know where they were. And she just said, hey, get me out of here. So it was a little bit of a
a war by attrition. Yeah.
Yes. Yeah. We kind of helped her out there.
Yeah.
And we went in, we worked that property up. We did refinance within about 13 months, and that property refinanced at 3.3 million.
Incredible.
Yeah. So look, that was circumstantial.
Yes. Yeah.
And I always say, just remember, in commercial, you can do something that you cannot do in residential. And that is, you can make $17 out of every $1 that you're getting in on rental in commercial.
Explain that a little bit more if people have just heard that going, tell me more.
Did that just miss you completely?
Tell me more. I mean, obviously the revalue and then you got cash flow, but yeah, take us through how you've broken that down.
Yeah, so on your rental, obviously, like I mentioned earlier, the strength of the value of your property is directly linked to your rental. So for every $1 that you're adding to your rental, at a 7% yield, you're getting $17 in value. Do the yield calculation on $1, you're effectively adding 17% to the value of your property.
Yeah.
So that's why in commercial we say value add. Go for as many value add strategies as possible. Rent out extra spaces, put car parks in, add as much space, bring in as many tenants as possible, because that's where your value is lifting your rental, and that inadvertently lifts your value of your property.
Nice one. Yeah, well said. There's a great
fun game.
movie.
Now you know why I'm passionate about it.
I agree. There's a wonderful movie. I'm not sure if you've seen it. I think it's on Amazon, called The Banker. Have you seen that one?
Maybe is it an old movie?
No, it's not too bad. It's got Samuel L. Jackson, a couple of guys in it. The two African American guys gone and built this amazing portfolio. I'm talking I think the 60s or 70s, for example. And obviously they couldn't transact, so they had to get a white American to do all the buying on their behalf because they couldn't do it. They bought all the commercial property in downtown LA. It was amazing. They amassed the biggest property portfolio in America through commercial.
Wow.
Incredible story. True story.
Oh, wow.
And then just how they got, their journey. Keep going.
I'm going to go looking up that movie.
I 100%. If you want to get the commercial property bug, you want to be bitten by it, watch that movie. Bernadette and I watched it a few weeks ago. We rewatched it, just going, this is an amazing story of, again, tenacity. There were laws there. Obviously, that prohibited them from buying property. That didn't stop them. They found a way. They ended up buying a bank. They ended up buying multiple banks as well. So, I mean, that's talk about betting against the house. But yeah, just an incredible story, and really around that commercial property side as well. So I thought I'd just throw that in there for you.
Yeah, that's fabulous. I'm definitely going to go and look that one up. Although I'm a commercial animal. I can't stop myself. I'm a cyclist, so every time I go riding, I look around and I'm always looking at the commercial. And I think, oh, opportunity, oh, opportunity.
Opportunities everywhere, Mish. It's what, and I think it probably gets to that stage, probably in business life, in your life as well. It's like, it's not about saying yes to every opportunity now. It's like what you say, it's not paying that dumb tax. So it's what you say no to that becomes equally as important as what you say yes to as well.
100%.
Yeah.
100%. I mean, we probably look at 100 properties a week easily, if not more.
Yeah.
And out of those properties, we maybe select one, maybe two, so we are saying no to hundreds of properties on a monthly basis. And we're being very selective about the ones that we are saying yes to.
Well said. Yeah. And I guess for someone online, they can convince themselves, they can go, oh, yeah, I think I can make this work. And that 98% rejection rate that you've got, maybe someone else doesn't have the same level of due diligence, experience, relationships, network that you go, this is why this deal doesn't stack up for us, but someone else less initiated may go yes to it and then have this, I guess, those headwinds that probably knock out that confidence, whereas you've avoided that. Yeah.
I guess it's like anything, the more you do it, the more experienced you become in it. It's like playing basketball. The more balls you throw, the more you're going to get in the hoop. So, and you get to know what works and where to bounce and that sort of thing. So I kind of feel as if it's the same for us. We do this fairly easily now. So for a novice, it's it's quite difficult.
Yeah.
And the best part is working with my clients, holding their hands and seeing them go, wow, the excitement at the end of the day.
Mate, congratulations. Well done, Mish. Really appreciate it. I'm super happy because you've got your own podcast as well. So we're going to share a link to your podcast. And this is it, right? If you want to delve deeper, if you want to educate yourself in commercial property, do the hours, put the effort in, roll your sleeves up, put those headphones on and start absorbing as much content as you can so you can then start to make confident property decisions, which is what we're all about here. So Mish, I want to say thank you very much for your time. Thank you for sharing your knowledge, your journey as well. I really appreciate it. We're going to put the links to your business details. If someone wants to reach out to you, by all means, please feel free to connect. And we don't have any commercial agreements with anyone that we feature on the show. So just to keep that above board as well. So Mish, I want to say thank you very much. Appreciate it.
Thank you, Aaron. It's been fabulous chatting to you. Thank you for the time. Likewise.
Wonderful. If you would love to leave us a review, if you found this helpful, please do so. If you've got questions for myself or Mish, for example, or you want to speak to Bernadette from a funding perspective, please feel free to reach out to us. And until next time, that's a wrap for another episode of the Australian Property Podcast. We'll see you next time. Thanks.